when we think about royalty investments and we think about how to structure a critical minerals portfolio, but really what we're looking for commodities that demonstrate good entry points, but also really strong longer term demand drivers.
Hello, you're watching Proactive. Joining me is Ecora Resources CEO Marc Bishop-Lafleche. Marc, very good to speak with you today. You've announced your full year results this morning for 2024, showed a strong set of financials. Could you talk us through some of the highlights, please?
Yeah, well, thanks for having me here. We had a strong performance in 2024, and that's great in the context of what was otherwise a very challenging general market backdrop for the year. For example, we saw strong volume growth at our Voisey's Bay cobalt stream, but that was also in the context, and the volume growth was partially offset by what was otherwise a very weak cobalt price environment, approaching actually at the end of last year 50-year lows in adjusted real terms. That led to an impairment of our Voisey's Bay stream, $15 million to the stream and $10 million to a deferred tax asset. But since year end, actually, it's amazing how quickly things can change. And we've seen today in the market a very different cobalt market dynamic. And year to date, cobalt prices are up approximately 60 to 70%. And then I think the last point to flag, around this time last year, we updated our capital allocation framework. And that was really done to prioritize growing our sources of short and medium term royalty income. Looking back on the year, we added the Phalaborwa royalty. And more recently, actually, we also added a producing copper stream. So that represents really tangible delivery on that strategy. And furthermore, the updated capital allocation framework should allow for far more rapid deleveraging on a relative basis to the policy that existed last year.
Marc, can you speak to some of the key portfolio highlights from the year?
I think we were really pleased with the performance of our base metals royalties from an operational side. And we can start with Voisey's. And there we saw in the second half of the year, the completion of the underground mine expansion. And subsequently, we also saw a really strong ramp up in cobalt volumes and cobalt deliveries, which is expected to carry forward into this year and beyond that into 2026. Mantos Blancos also performed very well. We saw a record quarter in Q4 of royalty income. And actually, that gave us the two combined gives us great momentum as we go forward into 2025. We also, of course, saw great production, sizable production increase year on year, actually, from Kestrel. And that's actually expected to continue this year as well.
Marc, it looks like base metals and critical minerals are a key area of focus for Ecora. Can you share some insights on the strategy behind Ecora's commodity exposure?
Yeah, I think the first point to note here is actually that critical mineral strategy is very broad. And it encapsulates more minerals than many think. And it's actually quicker to say what we don't really look at, which is precious metals, gemstones, fossil fuel-based energy sources. Otherwise, we kind of look at it. But at our core, the core strategy is really centered around base metals. 80% of the portfolio today constitutes base metals, and at the core is copper, 50% of our estimated net asset value. Royalties, by definition, represent very long-term investments. This is measured in not 1, 2, 3, 4, 5 years, but multiple decades. And so when we think about royalty investments and we think about how to structure a critical minerals portfolio, but really what we're looking for commodities that demonstrate good entry points, but also really strong longer term demand drivers. The world that we live in today is obviously, it's inconceivable to have a modern world without these critical minerals. And therefore, the critical minerals thematic or thesis is actually a lot broader than just, for example, the energy transition piece. I think that includes things like basic urbanization, digital infrastructure, the growth and adoption of consumer or business AI services. It also includes robotics, which may actually come faster than what a lot of people think. And all of these things have one thing in common, actually, and that's electricity. And as we increasingly see an electrified world, the critical minerals basket is increasingly important to the modern way of life. And that's probably why it seems that nowadays we can't go a day without hearing of government policy or government intent secure, bolster, develop critical mineral supply chains. They're just crucial to the way that we live.
Picking up on that, Mark, can you talk us through some of the recent drivers behind the increased prices?
Why don't we start with cobalt? I think, as I mentioned, as we approached the end of last year, cobalt prices really were at cyclical lows. I mean, probably, as I mentioned, I think on a 50-year low, if you adjust for real terms. 80% of the world's cobalt supply comes from one country, the Democratic Republic of Congo. And a lot of the price environment that we saw last year could be explained by supply additions from one operator in the DRC. That supply addition really overshadowed what was otherwise fairly healthy year-on-year demand growth. I think year-on-year demand growth for cobalt last year was around 10%, but the sizable capacity additions just kind of overwhelmed that. And in response, the government of the DRC in February implemented just an absolute ban on any cobalt exports for 4 months. The basis being that 4-month period would allow some of the accumulated cobalt inventories in the system, so to speak, to be depleted. And they also announced at the time an intent to consider other policies beyond the 4 months to further stabilize the market in the medium and long term. Recently, the DRC government has signaled an intent to consider some form of export quota regime. And presumably that would be structured in such a way that you don't see such sizable oversupply to the market. But it's, as of yet, it's too early to tell what that looks like exactly. So we'll have to wait and see. In any event, I think we've seen cobalt prices move 60 to 80% year to date upwards, which represents a really sizable move, especially if you compound that with the volume growth we expected to Voisey's Bay. But we'll have to wait and see how this situation plays out over the course of the year. I think on the copper side, copper has and continues to have really attractive underlying supply-demand balance. Longer term, the fundamentals are strong. The copper price going into this year has been quite strong throughout 2024. I think what we've seen in the past couple of weeks, or year to date anyways, is a further uptick in copper prices. In part, that's been driven by the possibility of tariffs on the import of copper into the US. And what we've seen is a lot of copper globally being bought, physical units being bought and moved into the US in the advance of this potential introduction. So again, we'll have to wait and see how that plays out for the rest of the year. But for our portfolio anyways, it's great to have the copper and cobalt price tailwinds in a year where we anticipate fairly strong volume growth from the underlying assets.
Looking ahead to 2025, which assets do you expect to see the strongest growth, Mark?
Yeah, I think, we expect to see strong production volume growth from our base metals portfolio holistically, from our producing base metals portfolio holistically. That's Voisey's Bay, Mantos Blancos, as well as actually the recently acquired Mimbula copper stream, which year on year should significantly increase our revenue complexion to base metals, and particularly copper. And we also expect some further year-on-year growth in production volumes at Kestrel in 2025, although those are, of course, expected to rise in the upcoming years.
Considering the longer-term outlook, where can investors expect to see key developments looking to 2026 and beyond?
Okay, keep this short. I think the first thing is the Voisey's Bay ramp up by 2026. An expectation that mine is really hitting its stride, and on a life of mine average, we're expecting something like 560 tons of cobalt deliveries per year. And then we're also in the medium term, there are two sources of growth at Mantos Blancos that I'm not sure are totally understood by the market. So it's probably worth taking a moment just to dwell on them and explain them. So the first is the possibility to increase production volumes by implementing a phase 2 debottlenecking plan. Capstone is doing a study on that this year. That's expected late in H2. So by 2026, it's very possible that we see the benefit with potentially 10,000 tons per annum of copper production increase. The second is the possibility in Mantos Blancos to treat historic tailings. So in other words, to take material that's already been mined and treated and reprocess it and extract copper. And that has the potential to deliver 25,000 tons per annum. So by 2026, we'd certainly hope to see these projects more advanced, and if not already implemented, a path to implementation. And we think there's a high likelihood of both, because both have very low capital intensity, high return on invested capital, relatively simple project execution, really the type of project that mining executives love. I think we should also see Santo Domingo continue to advance towards first production. By 2026, we'd be into a window of time that Capstone Copper has targeted as the beginning of the final investment decision to construct that project. That one is a big source of growth for Ecora once it comes into production. We should also keep our eye on the Phalaborwa Rare Earths project, which continues to advance to a final investment decision, and management, the owner of the Phalaborwa project, Rainbow Rare Earths, are targeting first production in 2027. Brazilian Nickel is continuing to advance its financing discussions for the Piauí Nickel project, and with a view to bring the project to a final investment decision in 2026. So there's a lot more we could talk about, actually, but I think this should give you a good feel for why we're really excited about the next 5 years and the period of growth that our critical minerals royalty portfolio offers.
Well, Mark, I hope you'll keep us updated on any progress with that. And thank you very much for speaking with us today.
Pleasure. Thanks for having me.
That's Mark Bishop Lafleche, the CEO of Ecora Resources.